The man who built one of the most influential crypto podcasts in the world entirely on the back of Ethereum just sold every single token he owned. Not some of it, all of it, and he is not alone. Harvard just exited an $87 million Ethereum position. Tom Lee is sitting on nearly $8 billion in losses. Senior researchers who have given 15 combined years to the Ethereum Foundation just walked out the door. And while all of this is happening, the XRP ledger just hit $4.8 billion in real-world assets and is accelerating. Today we break down what Ethereum's crisis means for XRP and why the institutional capital leaving one network has to go somewhere. This is XRP Verified. Let us get into it. Let us start with the signal that is impossible to ignore. David Hoffman, co-founder of the Bankless podcast, one of the most influential voices in Ethereum for years, just announced he has sold his entire Ethereum position. Every token, gone. His own words on the podcast were direct. He said there has been a massive vibe shift, and he no longer sees a path for Ethereum to recapture the momentum it had in 2022 and 2023. He pointed at leadership. He pointed at the decision to outsource execution to Layer 2 networks, which effectively handed the most profitable part of Ethereum's fee revenue to roll-up chains, while the base layer kept the least monetizable work. The ultrasound money narrative, the thesis that Ethereum adoption would drive fee burns and create a deflationary asset, collapsed when that fee revenue disappeared. And now the man who built his entire brand around that thesis has walked away from the asset entirely. This is not just sentiment. The institutional money is moving too. Harvard University liquidated its entire $87 million Ethereum position. Tom Lee's Ethereum portfolio is down nearly $8 billion, described as almost one entire FTX bankruptcy worth of losses. These are not retail traders panic selling. These are sophisticated, long-term holders making deliberate exit decisions after watching the fundamentals deteriorate over multiple cycles. And then there is the Ethereum Foundation itself. Multiple senior researchers and developers have departed, people with 15 years of combined service to the protocol. The concern is not just that people are leaving, it is who is leaving. These are the builders who have lived and breathed Ethereum since the beginning. When core infrastructure talent exits, it signals something deeper than market sentiment. It signals a loss of conviction in the direction of the project itself. The identity crisis is real. Ethereum is trying to be a store of value, but is being dominated by stablecoins. It is trying to scale the base layer, but is behind newer generation chains. It is caught between two strategies and executing neither cleanly. Now here is the structural question that matters for every XRP holder. When institutions that were building on Ethereum start looking for alternatives, where do they go? The real-world asset data is already answering that question. The XRP ledger just surpassed $4.8 billion in tokenized real-world assets, moving ahead of BNB, and is actively gaining assets that Ethereum is losing. This is not a projection. This is measurable on-chain data happening right now. And the institutional infrastructure being built around XRP this week alone is staggering. Ripple Prime just officially integrated with EDX Markets, the institutional trading platform backed by Citadel Securities, Fidelity Digital Assets, Charles Schwab, Paradigm, and Sequoia Capital. Together, these firms represent some of the deepest pools of institutional capital in the world. This integration gives institutional clients unified access to spot XRP trading and perpetual futures liquidity through one capital-efficient framework. Wall Street is not just watching XRP from a distance anymore. Wall Street is building the infrastructure to trade it at scale. On top of that, the New York Stock Exchange's parent company and OKX are seeking to launch perpetual futures tied to oil. And RLUSD and XRP are positioned as the core infrastructure underneath those flows. OKX already has RLUSD and XRP infrastructure in place. If oil perpetuals launch on that platform, with RLUSD as the settlement stablecoin and XRP as the liquidity bridge, that is a category of financial volume that has never touched crypto rails before entering the XRP ecosystem. RLUSD itself is exploding. Transaction volume just crossed $1.34 billion in a single 24-hour period. Monthly volume is approaching $1 billion on a sustained basis. And Ripple is minting RLUSD at a steady clip, multi-million-dollar transfers happening consistently. This is not a stablecoin sitting idle. It is moving. it is being used. And every single transaction on the XRP ledger that touches RLUSD requires XRP for settlement fees, fees that are permanently destroyed by protocol. The cross-chain picture is expanding too. Ripple just participated in a $6 million funding round for Squid, a cross-chain liquidity platform built on the Axelar network. The XRP ledger is now integrated as a supported chain alongside Ethereum, Solana, Bitcoin, Stellar, and Cosmos. What makes this significant is that Squid enables native-to-native swaps, no wrapped tokens, no synthetic representations, across over 1,000 decentralized applications. Every one of those applications can now access XRP ledger liquidity natively. The network effect of this integration compounds with every application that connects. Franklin Templeton just signed a new partnership with DigiFT, bringing its tokenization platform to Asian markets with the XRP ledger as the underlying infrastructure for settlement and RLUSD as the liquidity leg. The Reserve Bank of Australia already validated RLUSD for sovereign debt settlement through Project Acacia. Ripple is shaping UK digital asset policy directly through its roundtable at Innovate Finance. And the XRP ledger is sitting at number 4 globally in real-world asset tokenization, with a trajectory that is accelerating while the chains above it are stagnating or losing ground. The ETF data confirms the institutional rotation in real numbers. XRP ETFs pulled in $42 million in net inflows last week. Bitcoin ETFs bled $1.4 billion. Ethereum ETFs continued to lose ground. Total XRP locked in US spot ETFs is approaching 900 million, and that number grows every single day through consistent institutional buying. This is not speculation about future demand. This is current, measurable institutional allocation happening in real time. Now let us address price honestly. Because XRP is currently sitting at a critical support level around $1.30, the technical picture shows that if this level does not hold, the next meaningful support is lower. But here is the context that matters. Price is the last thing to move in any institutional adoption cycle. The partnerships are confirmed. The infrastructure is live. The real-world assets are growing. The ETF inflows are consistent. The RLUSD volume is exploding. Every single fundamental indicator is pointing in one direction. Price follows fundamentals. And right now, price is significantly behind what the fundamentals justify. Let me bring all of this together. Ethereum's most prominent advocate just sold everything and walked away. Harvard exited $87 million. Tom Lee is down $8 billion. The Ethereum Foundation is losing its core builders. And while Ethereum is in an identity crisis, Ripple Prime integrated with Wall Street's institutional infrastructure. RLUSD crossed $1.34 billion in 24-hour volume. The XRP ledger hit $4.8 billion in real-world assets. The Reserve Bank of Australia validated RLUSD for sovereign debt settlement. Ripple is shaping UK crypto policy directly, and XRP ETFs are gaining $42 million while Bitcoin and Ethereum bleed. The capital leaving Ethereum has to go somewhere, and the infrastructure, the partnerships, and the on-chain data are all pointing to the same destination. Stay informed, stay patient, stay positioned. If this video gave you real value today, subscribe to XRP Verified. I cover these developments every single day, so you always know what is happening before the rest of the market figures it out. I will see you in the next one.